morning, good afternoon, good evening. It's Tyler, the founder of Merlin Finance. Today I want to talk to you about how to short the housing market in a way that's easy for normal, everyday people. Today we're going to take a look at a financial instrument, DRV. It's an ETF. What it does is it seeks to have the inverse and 3 times as much return of the XLRE. What is the XLRE? The XLRE is an ETF that tracks the housing market, the real estate market. So DRV is an instrument, a stock that you can own that goes against the housing market and 3 times whatever the housing market does in the opposite direction. So if the housing market goes up, DRV goes down. If the housing market goes down, DRV goes up. It's just that simple. I'm not going to go into all the myriad reasons that I believe that the housing market is going to go down, but I will say that this is a bet that I'm placing that the housing market is going to go down in the near term. Okay, so let's get the legal stuff out of the way. I am not a financial advisor. I'm not telling you that this is a trade that you need to take. I'm not telling you that this is good for your risk management profile in your own money and your own account. What I'm telling you is this is what I personally do. This is how I make money for myself or for the client's money that I manage. So here, let's take a look at a Google Finance chart of the real estate market put against DRV, which is the financial instrument we're talking about right now. The blue line is the housing market. The yellow line is DRV. So as you can see at the very beginning, we have the XLRE, or the real estate market, trading at $32.44 a share, where DRV is trading at $550 a share. Now what we see is that the housing market is trading at $38 per share, and the real estate DRV is trading at $60 a share. So one thing I want to make very clear is that this is not tracking like the absolute nominal value of the Spider Select XLRE fund. What it's doing is it's doing 3 times whatever the daily move is. So whenever the blue line is going down, the yellow line is going up. When the blue line is going up, the yellow line is going down. What's very important to note is that this is not exact, and I have had an inverse leverage trade go against me in the oil market during the 2020 market crash. So I lost a lot of money because the financial instrument that I was using, like DRV, it was called Oil U and Oil D. They basically went under because of the type of investment instrument that it was. Yes, oil demand did crash. Yes, oil did go down, but Oil D did not go up. It also went down, and then very soon after that, the fund was closed. Okay, so definitely you need to know that you're taking a great deal of risk when you make these trades, but these trades are awesome if you know what you're doing and the fund doesn't go under. Okay, so right here, for example, we see in February 21st, 2020, the housing market was still going because we didn't really know a lot about COVID then, and DRV was trading at $210 a share. Well, once we figured out what COVID was really doing, the DRV went up to $580 a share, which is pretty much like a 2x, 3x, maybe almost a 3x. So you could have made a lot of money there. That was a money-making opportunity for the housing crash. So this is basically shorting the housing market. Obviously, as things have picked up since 2020, we've had an explosion in value in homes. Home prices. So as you can see, the blue line is just going up, up, but now it's starting to go down again. And I foresee that it's going to keep going down. That's my personal opinion. Okay? So let's take a look at Merlin. We put DRV into our ticker search window. We can take a look at general information, see that DRV right now is trading at $60.92. There's not going to be a lot of information here because this is like an investment device. It's not a stock. So there's really no market cap or anything like that needs to be reported. Okay, so moving averages inside the Merlin app, we can see that it's above the 550 and 200-day moving averages, which if you don't really know what that is or what that means, take a look at the user guide inside your Merlin app. Let's take a look at past returns. Past returns for the 5, 50, 200, 1 year have been variable. 50-day return is the best, so you could have made 83% on your trade if you got in at the right time. Let's take a look at price predictions. Once again, there's no guarantee, no warranty, anything like that. I'm recording this video, okay, so June 15th. So today, the Federal Reserve is going to say how much they're going to raise the interest rates by, and I'm pretty sure the housing market is not going to take that very well. So if we take a look at our probability sheet, we can see that the current price, again, is 60.92. DRV itself has been up the past 5 days, so it's definitely on a tear right now. When we take a look at the probability cloud, we see that 61.53 and 62.14 have a 70% chance of occurring tomorrow. I too feel that that is accurate. Merlin is great for bouncing investment ideas off of where you think the market is going to go. So I also think that the housing market is going to go down tomorrow, meaning that DRV is going to go up. So, yeah, if you were going to take this trade, then this is the trade that you would want to take, okay? Yeah, that's how you use Merlin for shorting the housing market, and that's the stock that you want to own if you want to get in on shorting the housing market. So, good luck to you.